Today I'm going to show you how to add the depreciation of a fixed asset in QuickBooks so that it shows up correctly in your balance sheet and your profit and loss. And it's quite simple to do. What is depreciation? It is just the portion of the value of a piece of plant, machinery, or equipment, or fixed asset, vehicle, for example, that has expired at a point in time. So it is worth less at that point, and we're just accounting for that amount of money that we've lost on that equipment because it's getting old. Your depreciation figure for each item will be determined for you by your tax accountant or tax advisor or your accountant, and it'll either be done on a monthly basis or an annual basis, but that's where you get the figure from to work out what to put in your system. So firstly, we want to go into our chart of accounts and make sure that the accounts we need are actually available to use. So this truck is the item that we want to depreciate, and here you'll see there are two accounts. This is the original cost account. So when you bought it and you got the invoice for it and you entered the invoice, that was the amount that was paid in this case, we say. And then the depreciation is the account that we want to add to. Now what this account does is, if this was 13,495 and we add in depreciation, say we're going to depreciate it by 4 years, so every year we're going to take 1 year off of it, of 4, then this bit will increase and this will decrease. If this doesn't appear in your chart of accounts, then just go up to new and create the account there. What this also is an accumulated depreciation. So each year or each month, as you add the depreciation figure, it will continue to rise and this will continue to fall. The other one we want is a depreciation expense account, which is what shows up on your profit and loss. The accumulated, and this one obviously shows up on your balance sheet. Now for quickness, if I just type in depreciation, and it also exists already. So there we can see it's under other expense, depreciation, so that's fine. If we look at it in the balance sheet, let's just say as at 26th of January 2017, the truck was there and it shows that we've got a fixed asset value for that truck of 13,495. So what we want to do now is take off the depreciation figure which our accountant has given us, and it's been depreciated over 4 years, which brings the amount to 337,375. So the method we use to actually account for the depreciation is a journal. So if we go into the little plus icon at the top right and open the journal, and we actually want to do it as of the end of the last month, just for quickness, or for accuracy, shall we say. So at the end of last month, we'll leave the number, you can call it depreciation. I could spell 16. Now you could do a number of assets in here. You could just use this one journal and do the truck, do the office equipment, all of them. But obviously we only have a truck on our fixed assets at the moment, so that's all we're going to do. So first thing we do is we debit the expense. So if we find the depreciation, and I want the other expense account, and the amount was 337375, truck. And then we want to put the accumulated depreciation amount, so the one that goes in the balance sheet, and as you can see, depreciation sub account of truck, so that's the one. Let's put it in for us. Okay, you can put a memo in there if you choose. Truck depreciation, because I'm anally retentive and like to do these things. And that's pretty much it. Now if you've got some kind of statement or paperwork from your accountant giving you this, you could attach it there just for reference, and then we save that. And then if we go back to our balance sheet and run report, it won't have changed from December, so we'll leave the date. You'll see when we come down to the truck, you now show the original cost at what it was. This is the depreciation that we've added. So the truck value has now changed, the book value has now changed to that. And then if we go over to the profit and loss, remember to run the report to refresh it because you've made changes. If you come down to the expenses, you'll see here the depreciation is showing an expense of the same amount that we depreciated the truck by. So it's increased our expenses in our profit and loss. Does that make sense? And that's all you have to do. Thanks for listening.